Hello, everybody. It's Jeff and Ron here once again with another episode of The Sense of Things. And today we're going to kick things off by talking a little bit about sector performance in 2024. We're going to talk a little bit about the next seven after the MAG 7. Who's the next ones behind there that could kind of potentially take leadership? We're going to talk about some PE trends today, and we're also going to talk about some revenue surprises. So stay tuned. We'll be right back in a second. Hey, everybody. Welcome to the show. Ron, how are you doing, buddy?
Good morning, Jeff. Good. We are definitely in the heart of the winter, that is for sure.
Yeah, I was going to say, man, you're wearing a sweater, it looks like.
It's in the 30s here most of the mornings, and then by late morning, it starts to warm up. But I was up in Sedona last weekend, and I think the wind chill the first night we were there was in the teens.
Yeah.
Yeah,
Yeah.
it felt like
when it's warmer in Texas than Arizona, this is not a good thing.
Well, don't forget, Sedona's up in the mountains too, but
True.
it's kind of like ice needles going through your skin. And
Oh,
I
yeah.
was
Well,
like, you know what? I haven't had that in 3 years. I don't miss it.
hey, it's a dry cold, Ron. Come on.
I think I know I said this in a podcast about a year ago. People don't understand that actually Phoenix has surf and ski shops. Nobody understands that. They have lakes. You could do a lot of water sports. A lot of people have pontoon boats. And if you want skiing, you just go 2.5 hours north.
To the north, yeah.
It's not Colorado, Utah skiing, but you could go skiing.
It's skiing and there's snow, yeah, up in Flagstaff and stuff like that. So
I heard Flagstaff gets about 120 inches of snow a year.
Geez.
That's 2 hours for me.
Yeah. We have no spot in Texas that has consistent snow. I will tell you that.
Dallas had some 2 weeks ago.
Well, yeah, I'm saying consistent snow. I mean, where you could actually ski. Skiing down a hill that's full of rocks and stuff is not what I consider skiing. So,
well, considering where you are in Texas, because Texas is its own country on its own, isn't there like some kind of a rivalry? Do you guys even consider yourself in the same state? It's like LA and San Francisco. One is SoCal, one is NorthCal. They don't even recognize each other.
Yeah, pretty much. I mean, you have Texas. You basically have four regions. So you have Dallas, Fort Worth, you have Houston, you have San Antonio, and then you have Austin in the middle. And the scary thing is, over the years since I've lived here, which is now going on 14 years, San Antonio and Austin just keep getting closer together. And at some point in time, I would expect that we become like this gigantic super metroplex area because they're just getting closer on either side.
Interesting. Yeah, the geographies around the U.S. are pretty interesting.
Yeah, well, and I mean, Texas, I could drive from here in any direction, and it would take me a minimum of 7 hours to get out of the state.
Yeah. Well, when I drove across country, I didn't get out of Texas one day. I went from Dallas to El Paso.
Yeah. That's hilarious.
I know. I hear you. All right. So let's kick it off here. I was rooting around and kind of doing some things, and this is a picture that I got to remember 25, 30 years ago. I think this may be from the 30s or the 40s.
Yep.
And
actually, you know what? It's a little bit later. That's actually a 1967 Chevy pickup truck. So it's after 67.
Well, I'm impressed that you would know that.
C10, baby.
Okay, all right, maybe, okay, all right. But you know what? It's interesting. I thought about this. Obviously, whoever this person was or whoever he works for, and I always love to look at things like this, obviously have transported tires before. Look at how these tires are stacked in the truck, almost like a web.
Yep.
So this way, these tires aren't going to fall out. Even probably the ones on the end there, maybe a big bump, I don't know. But look at how these things are stacked in there. This has been done once or twice before.
Absolutely. With no rope or anything like that to hold them in.
But here's the crazy thing. You're not lifting that car up on a jack until these tires come off.
That's precisely correct.
So I just kind of feel like...
Because on pickup trucks, the spare tire is right under where he's sitting there, and he ain't getting that out, which is going to be a
No,
problem.
no. And I just kind of feel like there are some days you just kind of feel like this where you think you got everything managed. You think you got everything stacked up. You think
Mhm.
that you got everything organized. And then all of a sudden, out of the blue, you hit a nail. You know,
Yep.
just I had a feeling like this about a week ago when I saw this picture, and I don't know why. It's kind of like going to the museum. Not I'm like I'm an art guy, but
Mm.
you just stare at a picture and you're just like, yeah, I feel you,
I,
brother.
I get it.
I feel you. I feel you. So anyway, I thought I'd share it. I didn't have any fun pop culture. I don't think I could one up the pillow fighting championship from last podcast.
No, dude, that's awesome. I went and watched a couple of those, and I still don't get it. But
All
okay,
right, so you saw
yeah,
so you saw what the ferocity of fluff was all about.
yeah. The master of disastrous pillow fluff, whatever. Yeah.
All right, so did he go through those taglines again on some of the videos you saw?
Actually, I watched the championship, and that's where all like three of those ones you shared were in there.
Unbelievable. All right, well,
The
what do you
Pharaoh of Fluff, the
have? I hear you. All right, moving on to some good, serious stuff here. So this was actually end of year. We've shown this chart a handful of times throughout the
yep.
last 12, 18 months. This is as of the year end, and I bring this up as part of my thesis for 2025 and beyond, at least 2026 too. You know, you're always looking for lagging sectors. And one of the
Mm,
amazing things is that you know, it's been 14 years since utilities actually led the way.
yeah.
Uh, and typically, if you take a look at really bad years, right, utilities may do well because people are looking for
Mm,
safety. Here
yeah.
it is last year, the S&P, even though the majority of the move was still by 10 stocks, utilities outperformed barely the tech sector.
Hmm.
And I think this is interesting because you don't see healthcare, which is really my number one sector going into the next,
Yeah. Me
you know,
too.
18 to 24 months. You know, it's just underperformed, you know, really three, four times out of the last 5 years. And I think we're good to go there. But energy, you know,
Yeah.
other than two good years in a row, energy is still in the bottom four for basically the last 15 years. I don't know
Hmm.
if anything stands out to you or what your
You know,
thesis
I
is
think
going
that's
into next
interesting because
year.
everybody thinks, oh my God, with President Trump coming in, they're going to reduce regulations and drill baby drill and all that. Well, look at like when he was in office the last time. I mean, it was the worst performing sector, and I think largely because we did so much to reduce the cost of oil that it gets to
Or
the
they
point
produce
where
more.
profitability goes away.
Yeah.
Yeah.
Well, not only that, but you know, with the recent sanctions to Russia, oil
Yep.
has spiked in the last week.
Correct.
But again, at the end of the day, why I have always had a tough time, and I really don't recommend it for clients.
Mm-mm.
You invest in companies that are pegged to a commodity.
Yeah.
You know, it's a, you know, Exxon, Chevron, ConocoPhillips, go Occidental Petroleum, go right down the line of all those companies. They may have rock solid balance sheets, but if oil goes down $10 a barrel, doesn't matter how good their balance sheets are.
Yeah. Yeah. Well, and I mean, the other part of it is the way I look at it and the way I'm playing the oil thing is okay, what industries are going to benefit from reduced oil? Industrial companies are going to do that. I mean, anything in that world that uses oil, it's going to go down, cost of input's going to go down significantly.
Yep.
The scary thing is, even in the healthcare sector, it's going to help out immensely. So
Yep.
I would be looking to the industries that could really benefit from all of this. And I don't think utilities are going to benefit, quite frankly. I mean, maybe lower cost input on the nat gas side of it, but nat gas is only like 25% of our production or our uh, electricity production in the utility space.
But don't forget with the utilities, a lot of that is driven by the data centers and the
Yep.
AI and or
Yep.
the anticipation of it. So maybe they're a little ahead of their skis too. But
Yeah.
kind of talking about market performance, you know, we were talking about the top seven stocks because in
Sure.
2023, the top 10 stocks were responsible for 70% of the S&P move. here we are on the next seven, and these are all recognizable companies as
Hmm.
far as how well they've done. Obviously, Broadcom was the tremendous winner last year following the AI and everything else. And even Broadcom has been an aggregation of several chip companies over the last,
Hmm.
I don't know, 10 years or so. But
Yep.
you got ExxonMobil in there. They're the biggest in the world. And look at their performance. They were
Yeah.
only up 6.7%. So, I think this is just interesting to look at it. I quote unquote borrowed this slide. You always got to cite your sources, but I think this type of information is important for people to understand
Well, it's
that they're
and interesting
just not
that
saying
Yeah,
stocks.
it's interesting. I didn't think Berk B was anywhere close to that. Berkshire Hathaway was anywhere close to that size, and it's amazing how that company has grown.
But also with Berkshire, it's also a litmus test, a canary in the coal mine for the consumer
Yeah.
because of the aggregation of all those companies and who they
Yep.
serve.
Yep.
And it actually has done pretty good. And one of the main reasons why, as we've talked about ad nauseum, the consumer's still spending.
Yeah. Absolutely.
Gotcha. Okay. So, kind of going from one end to the other, I saw this, and again, I'm borrowing this slide, and I thought this was interesting. This was the highest level last year in 15 years,
Hmm.
highest amount of bankruptcies filed. And I remember doing it in mid-year 2024, and in mid-year we were talking about the highest amount so far for 6 months in almost 20 years. So it slowed down a little bit in the second half, but
Hmm.
also 2010, that was coming out of the 2008 and 2009 debacle.
Yeah.
And look, we went through big, name bankruptcies last week. And this is something to keep an eye on, no doubt about it. Nobody wishes or hopes for this, but, what is this telling us? And
Yeah.
we'll have to kind of keep an eye on it.
Well, and I mean, you saw Big Lots go out. I mean, which I always considered kind of a crappy play. I mean, honestly, I'm not a big fan of it. Every time we've gone in there, we just kind of went in, went yeah, and walked away. But I mean, I think that's telling. And if you look at the stock performance of like the dollar stores and everything else, I think it's telling that the bottom end of the economy is just stressed beyond belief at this point. I don't think it's rolled up yet into the middle class, but certainly the bottom end of the earnings economy is getting stressed massively, and even dollar stores, it's not. I think their margins are getting compressed because of costs, but I think their consumer, they're getting stretched too.
Yeah, absolutely. So, kind of looking at earnings, I wanted to start with PE,
Mm-hmm.
and I love this chart that I borrowed again.
Mm-hmm.
FactSet always does a great job at consolidating a lot of really good earnings information, and we're going to go through some of their slides. But basically, there's always a reversion to the mean.
Yeah.
And you take a look at where it was 10 years ago, and the PE ratio basically was, you can see the market was undervalued, and eventually the market came up to the PE through quote unquote multiple expansion. Then we hit COVID, and then
Mm-hmm.
people didn't believe that the market was undervalued. The market just took off, and PEs have constantly been on a chase ever since until
Mm-hmm.
2022. And then at that point, what we saw was the market just took off after there. So one of
Mm-hmm.
two things is going to happen, or maybe both. Either the market's going to come down to the PE is going to come up to the market, or they're going to meet somewhere in the middle.
Yeah.
Uh, Obviously, if you just take a look at history, there's no way things can continue at the pace they are.
Mm. Yeah, and I mean, I think I don't think the market's going to come down to the PE. I think there will be that blend in between. But I the way I'm looking at things right now, I mean, everybody has this rosy view. I think we're going to struggle a little bit in the beginnings of this year. We
Yeah.
got a lot of excitement after the election, but now reality hits a little bit, and the market has run so much that I think it's going to be a bit of a struggle the beginning of this year.
Yeah, I'll try to find the chart, but it was interesting kind of looking at the stock almanac, which always has, great analytics for both of
Mhm.
us. They
Yeah.
were talking about the first quarter of a new presidential administration is typically a down quarter.
Yeah.
And we were looking for a rocky first half anyway, so
Mhm.
we could stumble out of the gate. And I think we're going to know more day one next week after the inauguration. We shall see.
Mm. Yeah,
Okay.
and on our next show that we do, actually, I'm going to talk about that a little bit of some of what I consider the market moving events going into the inauguration. So stay tuned for that next show.
Yep, and this is also a fact set source here. I'm not going to go through all of this, but I thought it was interesting if we just take a look at the following. Revenue is growing slower than earnings. And
Mm.
typically it's the other way around. And this just stood out to me because everybody wants top line growth, but the most important thing is earnings growth because
Yep.
that's how you invest. You're not
Yeah.
investing on money that
Yeah, you,
to the
you
bottom
don't get to
line.
spend revenue, you spend earnings that you make after it, after
Yeah,
expenses.
I gotta watch this because this is a bit of a conundrum to me. It doesn't really connect the dots and make much sense. But
Mm.
already the financials came out pretty good already this week.
Yep.
We'll have to see where tech and manufacturing is, but just thought I'd bring this up. And then again, riding the coattails of that, these are the revenue surprises by sector, and then I'm going to do earnings. And we
Okay.
just take a look here, consumer staples. This is interesting. Again,
Mm.
people are spending, they're consuming
Yeah.
technology is
Yeah, but I
becoming.
mean, staples, okay, you got to have toilet paper, you got to have toothpaste and stuff like that. So, I mean, it's not like discretionary. They're going out and buying just crazy stuff. I mean, this is stuff that you have to have.
Yeah, and look, and if you take a look, right, we were just talking about it, energy,
Mm-hmm.
doesn't show any type of potential revenue surprise. I know my healthcare is in there, but I'm looking at a second half of the year on healthcare and
Yeah.
utilities. Wait a minute, wasn't utilities the number one sector last year? And they're showing a 0% chance of a revenue surprise.
Mm.
I don't know. Just some of these things I really want to look at here. I mean, because even if you just kind of take a look at even on this side too, they're looking at a negative. It just
Yeah.
doesn't make much sense. But then we just, for our last slide here, kind of on earnings surprises, again, we had the revenue and now we have the earnings. And I just think this is just very interesting. Over here on the right-hand side, look at that drop in energy.
Yeah. Well, I mean, once again, I mean, everybody thinks, oh, well, this is going to be a boon for the energy business. It will in some aspects, but initially, what you're going to see, and I think some of the stuff that's going to happen on Monday. I mean, the president's going to sign a bunch of executive orders, which I'm not a big fan of, but I mean, yes, that'll happen where it kind of unleashes the energy sector. But in the end, that ends up pushing the price down, and that's the part that they get to spend. If you drop revenue, your earnings are going to go down, and I
Yeah.
I
And, and,
totally agree with that expectation.
And I know your gas prices in Texas are pretty cheap. It's come down
Mm.
here because next to California, Arizona is one of the
Yeah,
highest in the country.
yeah.
And our gas has been down steadily over the last year. So
Mm.
we'll have to see what happens. But again, energy also, we have to see how the winter is because it's not just gas, it's natural gas,
It's
it's
natural
everything.
gas and everything else. Yeah, and it seems like this year was it's turning out to be a much colder winter across the country. I mean, we've been pretty temperate here in Texas. I mean, we've had, it's cold, it's cool for us, but I mean, for the rest of the country, they'd probably be wearing shorts, walking around because I mean, we started the day at 37, we'll be at 68, I think, by the end of the day. So, it's not been horrible this winter, is what I would say.
Right. I
Next
got
week's
you.
supposed to be.
I got you.
Well, cool. Well, thank you for all that, Ron. Thanks for putting that together. And folks, we do these shows for you. So if you want to make sure that you don't miss any of them, make sure you subscribe to the channel and hit that little button wherever you're at. And you will not miss any of these as they come out, because I'm guessing we're probably going to be putting out a few more this year as we pivot around what's going on in the market. So thanks a lot. And we will see you guys back here the very next time.